Guys, this morning we're going to talk about how cryptocurrency markets right now are the most profitable markets to trade by far. The thing is that not many people know about them yet, and so that's kind of a good thing. And we're heading into that time where more and more people are finding out about them. And I just want to point out a really good article that one of you guys actually, I'm pretty sure one of you guys here in the group sent me this article the other day. It's a little bit old. It's from January, but it's a little bit old from January, but the principle is the same. I mean, basically, this guy's talking about how, using the Elliott wave theory analysis, you can also put that, on the entire market capitalization of cryptocurrency. We are seeing the Elliott wave unfold as well. Okay, and basically, this is what we're looking at here, where we had a large amount of volume that went into cryptocurrency in 2013, and then as a lot of the coins that we're playing are following the same exact chart because the markets are going to follow the money. So what we have here is this is basically the same Elliott wave formation that we're looking at on our coins, but looked at on the market capitalization of cryptocurrency as a whole. So basically showing us that we had a large bubble that happened, and we can see with this influx of money and then the decline of money in this first in this 2-year period here. This is when we saw a lot of our coins go through their initial market cycles that they're leaving. Okay, but a lot of them stayed in their market cycles and even through this period, and now they're just breaking out as this new money comes in. But this is really interesting to note that the entire cryptocurrency ecosystem, or the whole genre of cryptocurrency in a whole, is trending in the same direction. And we're now at a point where we're in the third wave of money coming in to cryptocurrency. And what this means is that it's providing a really big opportunity in the financial markets that you don't really see in other markets. Okay, because of the amount. Just put it like this: Bitcoin is going to have a large rise, and in order for Bitcoin to double in price from here, it's going to take basically another $20 billion. But when that money comes, it's going to have overflow and spillover, and other people are going to diversify their profiles and they're going to start trading other markets. Well, with these other markets and these altcoins, the percent gains in these altcoins is amazing because they're all leaving a period of decline, and now we have new money coming in, and we're seeing a massive opportunity where as these coins leave their market cycles. Here, let's look at something. This is a dollar pair for ETC on Bitfinex, so the chart's not very old. But I mean, let's just pick Stellar here. Basically, as the more money is coming into this now, it's creating huge opportunities because, first of all, by design, cryptocurrency is set up to pump. It honestly is. It's a very, out of all the other markets that I've traded, it's the only market where there's some sort of like predictability with the limitation of the actual asset that you're trading. Meaning that, you're going to trade, stocks and gold and silver and, other commodities and foreign exchange. But most of the time you're putting up your money to trade contracts or trade derivatives of, or you're not actually trading the actual spot price of stuff like you are with Bitcoin a lot of the time. You're usually using some sort of a third party like a brokerage system or some kind of a third party thing to give you more buying power, or more selling power, when you sell on margin or on high leverage with a lot of these, with the way that most of the financial markets work. But with cryptocurrency, it's a little bit different. All of these coins have a finite supply. Okay, all of them have a finite supply. So what that means is that the more money that comes into cryptocurrency, the higher the price is going to go. Okay, and we can see that directly correlated with how the money came in previously. When Bitcoin was having its bubble, the altcoins also went through their bubble. Okay, but the thing is that the altcoins move a little bit behind Bitcoin. Okay, meaning that Bitcoin is about to paint optimism in the market and get that big vertical push. That's what we're looking for. We're looking for Bitcoin to hit that point where it just starts to get vertical. And as that more money comes in to push us vertical and to double the price of Bitcoin from where it is now, there's going to be a lot of new money coming in, a lot of people playing different markets. And the market cycle for Bitcoin is, maybe like 3 stages ahead of the altcoins, meaning that the altcoins are just kind of painting their disbelief rallies. Some of them haven't even painted their disbelief rallies. They're just kind of starting. Like Stellar hasn't even really reached. When Stellar hits about here, I'd say when it breaks 1,000, basically, when it breaks 1,000, then it's going to paint disbelief in the market, just like Ripple did. Okay, just like Ripple did. Ripple came out of here and rallied so hard, brought $2 billion of market cap in, and then, consolidated down where it's, kind of still working its way out of that correction. But it left the market in disbelief. Okay, and that's what we see. Let me pull up the emotional market cycle here again, guys. Just so it's really visual for us. Sorry, I should have had this up here already, but it was a busy morning already. Okay, so come on. Bitcoin is ahead of the altcoins in its market cycle. Okay, so meaning that Bitcoin is about to paint. Come on. Sometimes the simplest things take forever. Okay. Meaning Bitcoin is about to paint optimism in the marketplace. Okay. And as Bitcoin paints this optimism, like we've had this entire, year-long ramp up for Bitcoin. But as Bitcoin keeps pushing up, and defies being sold down around this point, once it pushes up and makes a new high and continues, it's going to paint that optimism. And it makes very good sense, because if you think about it, even us from traders' point of views, when we see it, try to get dumped down under 1,000 several times, and then just keep bouncing back and bouncing back. Well, that paints a little bit of confidence, investor confidence, and gives it a little bit more of an optimistic feeling to invest in. It really does. Like, let's look at Bitcoin here on, let's say, okay, now we're on the weekly here. Okay. So let's look at Bitcoin here now. If Bitcoin would have just continued up at this point, okay, right here, if we would have just continued up and we didn't get this sharp sell down and have these days, let's more so look at the daily. Okay. If we would have just continued up here and continued up, it wouldn't have looked as safe of an investment. It would have looked like it needed to sell down at some point. Okay, coming from like an investor point of view, or someone that's looking to get into a market that just keeps rising. Okay, if this would have just kept going, it wouldn't have looked as safe, or wouldn't have looked as confident of an investment. It would have looked like, hey, this thing looks like it needs to sell down at some point. So this type of market action needs to happen to paint optimism in the minds of the investors, and in the minds of, you have to think about it. For us to get up here for Bitcoin all the way at the top to euphoria, we're talking about basically about Bitcoin's price doubling from here, okay, to about, let's say, 2,600. For Bitfinex, the target that I have, first target, would be here. Obviously, the 1.272 would be first. Okay, but I don't think we're going to stop there, because we're already pretty close to there. But the way that the psychology of the herd and the masses and the market is going to work is that Once we make a new high here and we keep coming up after we sold down so many times, sold down under 1,000 and pop back up, well, that's going to paint optimism in the market. It's going to seem more of an optimistic investment for people because, okay, it seems like it clarified that it doesn't want to go under 1,000. It keeps popping back up. There's a lot of indicators that are pointing that this thing, looks optimistic. It looks like it doesn't want to go down. So that's the kind of sentiment that we want in the market right now. Is this keeps climbing up. Okay. When it hits about here, 1475, let's just say 1500 area. When it hits about 1500 area and stabilizes and keeps, having the buyers come in, well, what's that going to do? It's going to paint belief. It's going to start, we're going to go shift from optimism into belief that this thing is just going up. And that's what we want. That's what we're looking for. So I'm kind of, relating the Fibonacci extensions here to the cycles that we're going to go through here. Okay? Meaning that when we hit around here, we're going to start leaving optimism and start going into belief. Okay, like, wow, Bitcoin's really going to go for it. Bitcoin's really, going to head for whatever number people have in their mind. Once it crosses about 1,500, it's going to shift the sentiment of the marketplace a little bit. And people are going to start referring back to all these articles that they read that said, oh, Bitcoin could reach 10,000 or, oh, Bitcoin could reach 500,000 or, all the astronomical numbers that people come up with where Bitcoin could go. Now, first of all those numbers that people come up with off of where Bitcoin could go are all based on the same formula of market cap divided by available supply. And just real quick before we move on from this point, I just want to give you a little side note. Right now, Bitcoin's market cap is $20 billion. Okay, that's what gives us the price. $20 billion basically divided by whatever, 16, 18 million coins gives us the price of 1,260 right now. Okay, now $20 billion is really not a lot of money in the financial trading markets. Okay, just to give you an example, the market cap of Apple stock, okay, just Apple alone is like close to like $800 billion. Okay, so we're talking like, $20 billion for Bitcoin and $800 billion being traded for Apple stock. So what's going to happen to the price of Bitcoin when it becomes more mainstream, more used, more accepted, more of a household kind of a name? Like in 2013, when we were here in this area here, this is actually when Bitcoin got my attention. I didn't know what Bitcoin was. I was trading other things. I was trading foreign exchange and stocks and gold and silver. And then all of a sudden it was like, whoa, what is Bitcoin? What is this thing that's worth almost as much as gold? So it caught my attention here. And this is where I started trading cryptocurrency, on the downside. Like it was shortly after that you could actually short on Bitfinex. You could start to short Bitcoin. So, that actually, helped it accelerate this downwards cycle here, obviously, probably. But, but during this time of the downtrend here, that's when the altcoins started to thrive. So the altcoins market cycles are behind Bitcoin, meaning that as Bitcoin paints optimism, belief, thrill, and euphoria, and all that new money comes in, when Bitcoin hits its peak and starts to, decline and start to go through the bearish part of the market cycle, well, other coins like Ripple and other things that just painted their disbelief rally, they're going to be, creating this part of their leg up, okay, until they try to, fulfill their all-time highs and create, their next market cycles. So as that happens, it makes perfectly good sense because Bitcoin's going to go first, just like it did the first time. And then when Bitcoin starts to decline, all of the coins that are paired against Bitcoin are going to have that extra little boost to fulfill their market cycles up further. So right now, we're looking at a lot of coins that are just leaving the depression area. And some of them painted disbelief. Ripple painted disbelief. Sia coin looks like it's getting ready to paint disbelief. Digibyte looks like it just about painted disbelief. So we're getting there in some of these altcoins to the point where they're initiating their first little legs of the market cycle while Bitcoin is about to paint its optimism. So for, like I said before, for Bitcoin to double in price now, we got to have another $20 billion come in. You know, it sounds like a lot right now, and it will be a lot at this current point in time. But that amount of money would push us to about here, about the 2.272, double in price, about 2,600 from about 1,260, 1,300. So that's what I'm looking for in Bitcoin. Now, mind you, Bitcoin very well could run for all these extensions. Okay, it very well could. Okay, it could get all the way up here to about $5,000. But we have to think about how realistic that is in this time frame. It would take 4 times the amount of money than is in Bitcoin right now. Now, I'm not saying that couldn't happen, but it's really all about following the money. You know, I'm expecting a double up. You know, because of the amount of money that it would take in a relative time frame to get us to this point. Now, I think that what Bitcoin will do after it hits here, it'll do something similar to what gold did. The chart for Bitcoin and the chart for gold are very, very similar for market cycles, except for Bitcoin, we need to look at this in like a 3-day picture. Okay, for gold, we need to look at it more in the monthly, because it's a lot more data. But you can see that the market cycles are the same. It's the same relative psychological pattern, okay, that repeated itself here for gold, for Bitcoin. It's repeating for the altcoins. It happens in a lot of stocks too. But this is very, very, very defined here. Okay, this looks a lot like the 3-day for Bitcoin, except it's a monthly. You know, we have a market cycle here, and right about here, we start to paint optimism in the market. Okay, right around the point, or actually no, it seemed like right about here when it sold off here, and then it came back down, and it came back up. Okay, right about here is when it started to really look optimistic, and then it crossed the 1.272, and it started to get the belief, the thrill, and the euphoria. The euphoria took us all the way up to a little bit above the 2.272. Okay, now just to point out here, I'm not sure if any of you guys are trading gold or not, but we'll, since we're looking at the chart, we'll just touch upon it and show you here that gold just tagged this downward trend line of this wedge. Now, this is a really good example to use for market cycles because we're talking about a line that has been here for 2,160 days. Okay, this entire market cycle for gold, from the beginning back here when I'm looking at this to now, this is as old as me, guys. I'm 40 years old, and this chart starts here at like 1976. So we're looking at market cycle here that took, years to play out here, and another bubble that's coming. It's taking years to play out, but it's still within its emotional plot. All these price points are all matter. All of these Fibonacci levels are still relevant. All of these lines that were put here 2,000 days ago are still relevant. So, which is really interesting because, if gold doesn't clear this point right here, okay, if gold does not clear this point right here, okay, now we're looking at a monthly. If gold doesn't get enough, let's check our stochastic. Now, the stochastic looks kind of like it could do it, but these are the kind of things that we're looking for in any market. Okay, like if gold were to clear this line here, then, on the lower time frames, you're really starting to think about, gold may actually be going up again now. So this is like a make it or break it point here for gold at this line, basically at like 1,300. Okay, now if it doesn't clear this line, it's most likely going to fall out of the monthly cloud and bleed all the way down into this wedge more until maybe it even comes to the top of this wave. Okay, all the way down to here, if people panic enough. Okay, or understanding that Elliott waves should respect, this wave here should respect this previous high. That's about as low as I would see it panic. Okay, but it has to clear this line. These market cycles are initiated. They're still true 20, 30, 40, 50 years later. Okay, so same thing with Bitcoin now. Bitcoin is basically has to leave this zone and rally way up and get that vertical leg that we're looking for. Now, after Bitcoin gets that vertical leg that we're looking for, let's go back to Bitcoin now. On the next. After Bitcoin gets that leg that we're looking for up here, we're looking for something similar. We really are. We're looking for something similar because to double up our money here in Bitcoin to say, okay, it's going to take $20 more billion to get us to this point, I feel like that's a good enough of an impulsive influx of money at this time. Okay, we very well may come here and then do something like gold where we come down to about here, stabilize, and then figure out if we're going to break the wedge from that previous run or not. But I'm expecting Bitcoin to at least work its way back up here. Okay, now we're going to be playing this thing, all these waves, and when it shifts and starts to head down, we'll be selling the tops because we'll recognize that the market cycle has shifted. But what's important to note here is that Bitcoin is leading this rush of new money into cryptocurrency. Okay, as this new money comes into cryptocurrency now, this is basically, what is this, like January? We're a little bit higher now. But what's going to happen is, just think about it like this. When this chart was made, basically, in January, that's about when I started my YouTube channel, about middle of January or so. And I was talking about how there's a pretty huge opportunity coming to trade altcoins again. And, I had been trading Forex and stocks. I've been trading Bitcoin the whole leg up. But the altcoins didn't really catch my interest again until there was, at least over 10,000 Bitcoin daily volume on Poloniex. And I remember even mentioning that in one of my videos to say, okay, yeah, we got about 10,000, Bitcoin daily volume on Poloniex. That's about, $10 to $12 million exchanging hands. It's enough liquidity to make some money here every day. Okay. But now when we look at Poloniex, it's like, 70 to 100,000 Bitcoin daily volume. And we had a couple little pushes there, like when Ripple, pumped and a couple other coins really pumped, that we were, well over 100,000 Bitcoin daily volume. So what I see happening now is we're probably going to head into another push of volume. Okay, as Bitcoin starts to really, really, really increase in price here and do that vertical leg up, that's going to bring a lot more volume to cryptocurrency as a whole. Okay, so we're going to experience that overflow of volume that's pushing Bitcoin up here come into the altcoins and help a lot of them push to their disbelief rallies and then push further to their hope rallies. And what that's going to do is it's going to create a massive opportunity to gain in cryptocurrency, more than any other market right now, guys. Because if you want to make, let's say, if you want to take, let's say, $10,000 and make 50% on your money. Okay, so you put in $10,000, you get out $15,000. That's going to include a pretty large amount of risk trading stocks, foreign exchange, anything where you're trading on leverage. Because you're either going to have to do it in baby steps with small risk, or you're going to have to really nail some good trades to turn your, to gain a 50% return on your money. So either A, you're going to have to do it in small steps, or B, you're going to have to take a pretty large risk of losing a good chunk of that $10,000 to make, 50% on that money. Whereas in cryptocurrency, a lot of these coins, especially with the liquidity now on Poloniex, I mean, we're talking about, let's just choose AMP, for instance, since it's right here on the list. Okay. We're talking about coins that, or markets. We're talking about markets that are leaving behind old depression and old market cycles and just, times when people weren't really caring to trade it. But now we have this new influx of money coming in. And that's why we're seeing a lot of these things trend up, because market cap divided by available supply gives you the price of cryptocurrency. So by design, cryptocurrency is set up to pump with the more money that comes into it. And we're going to see that increase of price happen so dramatically and unfold in a very repetitive predictable pattern, which is the Elliott wave. Okay, this guy even, I love this article. Paul, I mean, when you guys have sent me this article, I love this article. It's great. Basically like this, we're seeing cryptocurrency unfold in the Elliott wave pattern because, where does it say it here? I love the quote that they're talking about. Because this is a market that is based on high levels of fear and greed. Okay? Meaning that everybody is, let's see it here. Here we go. The market is strongly driven by fear and greed, two basic motivators that we all need to survive that can also get us in trouble. The emotions displayed in the charts is pretty clear patterns of waves painting the regular cycle between hype, excitement, and depression, panic. That right there, that sums up exactly. Crypto markets can be very emotional as many participants are aiming for extreme gains while exposing themselves to huge risks. Okay? Now, this huge risk part, yeah, I mean, all markets are risky, but when you know how to trade, these markets are a lot less riskier than foreign exchange or anything where you're putting up a large amount of money on margin or leverage. So now this could be just as risky trading Ethereum Classic, Dash, Monero, or any of those on BitMEX on high leverage because there's a lot of slippage in the price there, and you could very well get into a position and all of a sudden you're up 50%, and then 10 minutes later you're down 25% because there's not enough liquidity there yet. They're new markets being traded on high leverage, so those are just as risky as foreign exchange or something like that. But like these coins on Poloniex, these spot price altcoins, okay, these spot price altcoins are having enough of a daily volume now. Anything that has like 500 Bitcoin daily volume or more, even 250 Bitcoin daily volume or more, and is making an expansive move in price where it could go, let's say, from anywhere from here to here in, let's say, I don't think that would take a month, that move. Obviously, like relative to the first wave here, this one took, let's say, from breakout to there, about 9 days, 10 days. So, we're looking at a situation here on some of these coins where they leave behind previous price zones. They leave behind resistive areas and turn those resistive areas into support. And then they move on. And they're coming from such a bottom here. Like, that's another thing to point out, guys. We're looking at the bottoms of a lot of these charts, like the extreme bottoms. So now these things are leaving behind previous price action and clearing, like, this one here is clearing the daily cloud and opening up its way to, this thing has been under the daily cloud for, what, like 164, 165 days? This thing's been under the daily cloud. So now it just escaped the daily cloud. Okay, and now what is it doing? It's coming back and it's testing the daily cloud. It's tagging the daily cloud. It's turning that resistance area that it just left into support. Okay, that's why we see all these tags. We came out of the cloud, we came back down to the cloud, we're tagging the cloud, we're starting to move away from it. Our exponential moving average is coming up, coming out of the cloud. So this thing's leaving behind, the 8,000, sub 9,000 price zone. And it's looking for the new place to go. And that would be, these targets, like that we laid out. Basically like up in here. We already seem like we tagged just about the bottom of this area. Okay, so let's just kind of mark out this area here. Basically seem like we already tagged the bottom of that area. So the next logical place is to try to tag the top of the area, right around here. I don't want to say the exact price point right there, so I'll just kind of say instead of 16.8, I'll say 15. That's just to be safe. And price increase here from about 9 to 15 is a great increase in price. So cryptocurrency is offering opportunity right now to with very little risk. I mean, there's still risk in cryptocurrency, especially like if you get in the wrong coins. Like Poloniex just screwed a lot of people yesterday by delisting, by announcing they were going to delist a lot of those coins. Like I know some people that were in some of those coins, and they're just like, what the hell? You know what I mean? So, cryptocurrency, you always have to watch out, man. This is a new emerging industry and market, and it seems like Poloniex, they're just like, hey, our servers suck, and instead of paying out to get new servers, they're kind of limiting the amount of traffic to certain markets and opening pathways to allow more traffic to others. I don't know what the reasons are, but there is definitely some risk. But that's why I always say, use a stop loss and all that stuff, guys. But for stuff like coins that we don't think are going to get this delisted and are going to continue, the markets are offering a lot of opportunity here, because when you think about something like this, I want to use this one as an example here, because we're leaving behind, like, we had an impulsive market cycle back here, a long area of depression under the cloud, and then when we sparked our new little breakout to reverse the market cycle here, we did it in a daily cloud, and that's why we chopped around in here for like a month. Okay, but until we broke this this triangle pattern, and we broke out from the daily cloud. So now with this market here, getting into this thing as close as you can to this cloud and this breakout line between, like, basically where I said anywhere between like 85 to 9,000 in that zone is a pretty good setup for placing yourself for where this thing could move to in the next couple weeks, because it's leaving behind old price action. It's turning resistance into support. And now there's enough liquidity in these cryptocurrency markets where you could put $10,000 into this market and try to get out, let's say you could, put $10,000 into these markets and try to get out, 75, 80% on your money within 2 weeks. Okay? Try doing that in any other financial market. It's going to be really hard, like really hard. I mean, we're talking about making anywhere from 50 to 100% on our money within a few days to a few weeks, when people's traditional avenues of like putting their money somewhere to make money are like what? Like the banks, the banks. I think the most I've ever seen the bank offer someone was like 12% annually. I mean, what a waste of time and money that is, when you can put your money to work for you in these markets. So there's already a whole niche and genre of people trading financial markets. And a lot of them are losing money, on those high leverage situations. I mean, I know probably like 90% of the people that I'm bringing into crypto from Forex are loving crypto because it's less risk. They don't have to worry about trying to get into a position and then having the market turn around on them, and everything they put up for the trade, maybe they lose half of it before they even get into the trade, or they get liquidated and lose all their money just trying to take a trade. Whereas here, if you buy these coins at 9,500 and the price is 9,000, oh well, so what? You know what I mean? You're going to hold those coins at a little bit of a negative balance for maybe a day, maybe 2 days, maybe 3 days. But the reality is you don't have to take that loss unless you press the sell button. Unless you panic out of it and you say, oh, it's lower than I bought, let me sell. And most people that are doing that don't even understand the geometry of the market, and don't even understand the trade that they got in. So, it's like for me, like a couple weeks ago when I put a buy order in for Dash and went to the beach, and then Ripple kept pumping and my buy order for Dash got dumped on. I came home and the price of Dash was like 30% lower than I entered. But I didn't press the sell button and take that loss. I said, oh, wow, okay, it'll probably bounce here on that retracement point, and I'll give it, 2 days. Give it 2 days to see if it comes back. Within the next day, it was not only back up, but actually in profit. So, you just have to, by combining the knowledge of how to trade these markets with with this environment of these actual cryptocurrency markets, guys, this is like, you guys are looking at $1 million opportunities here. Like literally. Like if you guys practice these strategies and practice this L8 wave theory and practice the emotional discipline of not being the guy that's chasing the pump, not being the guy that's, remortgaging his house and going all in on leverage at this point in the market. Once you're not that guy and you're, the guy that understands how the waves unfold, understands support and resistance, and understands the opportunity that's in front of us, yo, this is like, start stacking it, guys, because this could literally put your kids through college, or be your retirement plan, you know, in US dollar. Not saying buy these coins and hold them until they're worth $1 million. Like, yes, we could very well look at a position, 5 years from now where a lot of these coins are worth a lot more. But that's a very, speculative point of view. You know what I mean? Like, a lot of these coins, who knows? Maybe another 5 coins that we trade or that we're interested in, 6 months from now, they'll get delisted and lose half their value. We don't know. We want to take the profit when it's there. Like, for me, I only hold Bitcoin, and now we'll only hold things that are trending up. Like, if I'm making money and I have an opportunity to, like, let's say, like, when Bitcoin is trending, like, I trade against the US dollar on Bitfinex. So the whole year that Bitcoin has been trending up, I've just been stacking my Bitcoins. But as soon as Bitcoin hit a point where it was up in the 1200s, I sold a lot of Bitcoin for US dollar that was on the exchange. And I took that US dollar and bought Ethereum, in like the high 30s, low 40s, and have been holding my, US dollar in Ethereum, because there's more money to be made on my dollar in Ethereum faster right now. Meaning that, like, if I want to make $30,000 on $100,000, I can do it way faster in Ethereum, because I can buy a larger position in Ethereum, and Ethereum just needs to move $10 for me to make that large amount of money. Whereas Bitcoin, I can only buy a certain amount of money, where I can only buy a certain amount of coins with $100,000, and for me to get that same $30,000 increase on my money, Bitcoin needs to go $100 in price, $200, $300 in price. So there's a lot more money to be made in US dollar on other pairs, because you can get more of them. So if they're trending up, I'm only holding things that are trending up. Like, as soon as I see Ethereum get to a point where it's not worth holding anymore, I'll go back to US dollar. But Ethereum very well could be going through the early stages of Bitcoin's bubble. I mean, when you look at Bitcoin compared to Ethereum, let's just look at Ethereum real quick. Okay, I mean, look at Bitcoin real quick and think about Ethereum, where Ethereum's at. Okay, now think about this. We have, oh, sorry, not Coinbase, Bitstamp. We have Bitcoin here on now. It's probably like, gosh, it's probably, let's see, 1, 2, 3, 4, 5. It's probably on its like 6th bubble, in a sense, because there was 2 bubbles before this that we can't even see in here that happened. When it was worth pennies to $1, and then $5, and then it was a big thing. But this rally right here that we do see on Bitstamp, we can't see it on Bitfinex, we can't see it many other places, but this one does show it. Now look at this rally here. Okay, look what Bitcoin did. It went from basically right here where it was flatlining, which was about $12. Actually, you know what? I want to zoom in on this a little bit more. Look at this on like a daily and then pull it back. Now, Bitcoin's price went in this first rally back here, or the first one it shows here on Bitstamp. Bitcoin's price went from $12 to $250. Okay, and just think about that for a second. How many people thought when Bitcoin was at $12, how many people really thought that it could possibly go to $250? Probably not too many, right? I mean, I'm sure that when it got to $50, people were like, oh, this is it. So, and now look what Ethereum's doing. Ethereum just went from $12 to $50 and stalled out for a little while, but now it seems like it's basically built a floor on top of $50. So look at this chart and think about Ethereum real quick. Now I'm talking Ethereum dollar. Okay, Ethereum Bitcoin chart will look relatively the same, but I'm more so thinking about dollar on Bitfinex and history repeating itself and market cycles repeating themselves and duplicating. Now look, this thing right about here, right back here in this flatline area, $14. Let's go to the bottom of the flat line right about here. 10, 12. It was about $12. Okay, when it started, flatlining, then breaking out. Okay, right about here. Sorry, first time here. Right about here. It makes sense. It stalled out of all the psychological price points. Right about here. Now we have a big, days here of battle. 40, selling it down. 50, we flatlined up here around the $45, $50 mark for a while until it just broke. And then it started again. Sold back down, clarified that it was support, and then this thing rallied. This thing rallied all the way up to $258. So let's just say $250. From $12 to $250. Now, how many people at this point in the rally, right in here, how many people at this point in the rally thought that it was possible for Bitcoin to go to $250? Probably not too many. Probably not too many. So now when we look at Ethereum is almost in the same position on Bitfinex, especially against the dollar. I mean, I'm seeing so much similarity in Ethereum dollar chart compared to Bitcoin dollar. Okay. Now, pull this back here. Okay. Basically, almost the same thing, guys. We were at a level here for days. Days and days and days. Flatlining here. About $12 to $14. $12, and then bang. Now we take off. And we're continuing. Okay? And it looks like we're very well continuing here on Ethereum. So, it's almost the same thing. How many people here at this point in Ethereum think it's possible for this thing to go to $250? Even right now, I doubt it. Even right now, I doubt it. But I know it's possible. I know it's very well possible. As this influx of money comes in, there's a possibility to push a lot of these coins to exponential heights. And so what that's doing for us is it's giving us a lot of opportunity to gain in these markets. I mean, I can pull up almost any of these markets here and pull out an opportunity for a trade that's going to give you more return on your investment than with less risk than anything else that you could trade right now. People trade, for months to get the kind of return that we're getting in a week on cryptocurrency. And a lot of people will, gosh, I should just remove all drawing tools here, guys. Sorry. Okay. So a lot of people don't understand these markets. These markets are new to a lot of people, So there's going to be like that whole influx of money that comes in and pushes us, into this next, breakout here, and we keep going higher with the market cap that comes in. That's going to be, the majority of that money is going to be dumb money, honestly. I mean, there's going to be, I'm bringing a good amount of Forex traders to it, but they're not necessarily very well educated traders either. There's a lot about the market that confuses people. It's not that hard of a game. You just have to know what to look for. You have to know what to look for. It's like a language, I didn't know any Spanish when I came to Costa Rica. And now I can pretty well speak Spanish. Like when I looked at these charts for the first time years ago, I was lost. I was lost, guys. I would look at MetaTrader 4 and I would look at, the little pips, I had to figure it out. Like, what does this mean? I'm making a pip, a percentage of a point. It's just like, it was a lot of confusion. But once you learn the game, it gets easier and easier. So we're at an advantage right now that we are understanding this game. Like, I understand cryptocurrency so well. Every little factor and detail about this game I understand. And now I'm showing you guys as much as I know, so that as this opportunity presents itself now over the course of the next year, I'd say we have at least 6 months to 8 months of upside. And then we'll probably start to shift into, the market cycles, in their decline. And that doesn't mean that we can't make money off it. We'll just, just like we're buying the dips, we're going to sell the tops. I mean, just like any kind of an Elliott wave setup, we're going to, if we're looking at an Elliott wave formation on the way up, we're trying to buy the 2 point. And we're looking for, maybe a 61 to 78% retracement to get in, or we're looking like this to play these markets, to buy. Okay, so oh yeah, ETH will lead the way, and then the other coins will pump. Yeah, Ethereum will lead the way. Like a lot of these coins are going to pump at the same time as Bitcoin too, because when this happens, sorry, I can't read all these questions at the same time, guys. When this happens, where's it at? Okay, when this happens, it's going to bring so much more money into the game that people are going to play altcoins too. So when Bitcoin gets vertical, the money does flow into altcoins, and the altcoins will pump at the same time. We're only seeing the inverse relationship with Bitcoin and the altcoins when the altcoins are in their corrective phases. Like you guys probably noticed that, like we had large runs up in Monero and Ethereum Classic. So when they did their correction or their consolidation, when they did their consolidation and correction, since they're paired against Bitcoin, if Bitcoin's going up, we're feeling that more. Okay, yeah, they're getting sold down. They're getting consolidated more. They're getting knocked down another retracement level. But once they hit their points and then where they want to continue on, they're going to continue on. And they're going to pump at the same time as Bitcoin. So as all this new money comes in, it's painting plenty of opportunity here. Like even just this run here, understanding that Factum is most likely going to make a new all-time high, this here is showing us that we have a potential upside run with high volume from here to here of like 80% at least. Okay? Now, where are you going to get 80% return on your money in any other financial market within just a couple weeks? It's impossible, guys. It's impossible. Like, you can make good money trading foreign exchange, but you have to trade full lots. The only way you're going to make money in foreign exchange, and you guys might not even know what I'm talking about when I say lots, but lots are like the size of the trade. Meaning basically like if you are like a percentage of a lot, you're trading like $1,000 worth, and then like maybe half of a lot, you're trading like $100,000 worth, and then like a full lot, or like a full lot size, you're trading like $1 million worth of foreign exchange currency, but you're only putting up, let's say, $1,000. So, but you're gonna lose that $1,000 fast, because if you get on the wrong side of the trade, meaning that it's so much easier to lose your money. Like here in cryptocurrency, you don't have to lose your money unless you decide to lose your money. In foreign exchange, you could say, let me get into the trade right here. This looks good, like it's going to go up, and then it comes down just a little bit before it goes back up, and just that little bit it came down, all your money's gone. So even if your analysis was right, even if the foreign exchange currency pair goes in the direction that you thought, hits the targets that you thought, if your entry wasn't precise, your money's gone. Your money's gone. So, I have little tricks that I use when I trade foreign exchange, expecting to get stopped out and actually entering where stops are getting, pushed, where the price is getting pushed to liquidate stops. I actually try to enter the market there. But now I don't even, you guys probably noticed, like my whole list here now doesn't even have, I have one foreign exchange currency pair on here. The price of the Costa Rica colon against the dollar. And that's it. Because I want to know how much I'm going to cash my dollars out for local money here. And that's it. USD against the CRC. That's it. Other than that right now, foreign exchange to me, I don't even care. Because I can make the same amount of money there, but I'll probably lose 25% of my money trying to do it. And that's being skilled at doing it. Okay? Whereas now with cryptocurrency, it's like, man, you can just put your money into these markets and understand that they're trending in a certain direction, and stick to a certain analysis of it, and you're gonna, even if you don't make the 80% and you have to cash out here at 30%, let's say, that's still a lot of money on your money in just a few days. So cryptocurrency markets right now are very, very profitable, and that is attracting that's what's going to attract all the rest of the money to push this up. I mean, it's going to help. It's not, this has already been painting for Bitcoin for a while, but once it shifts and people just, start jumping in and market buying Bitcoin, we're going to see what's called block buys soon. And a block buy is basically where, you're looking at, the books on Bitcoin Wisdom, or you're looking at the books on Bitfinex or something, and, you see like maybe a 200 Bitcoin order there at a certain price point. Well, block buys are where people just come in and just buy all of it. You just start seeing price points get taken out, and the whole block gets bought. So that's going to happen. That's going to happen. I mean, I saw that happen in Bitcoin in its bull trap runs. When Bitcoin was actually heading down in this part of the cycle, every time it popped up in these little bull trap runs, the sentiment was, oh, now we're going to the moon. Now we're going to the moon. So, it's about to get to that point where it gets vertical and people just start buying blocks, just start market buying. And as that happens, it's going to cause a lot of attention, it caused a lot of attention. And when we get to about this point here, this is when, once it gets optimistic and in about this level, I can almost guarantee you that's when you're going to hear about Bitcoin on the news again. That's when all the financial analysts are going to say, oh, yeah, Bitcoin, it was a very good investment for 2017. It's probably the best investment in any currency. And then they're going to start, giving all the propaganda for how good Bitcoin is. And that's just going to push us up more, but they're telling everyone at the wrong time. Like, Bitcoin was a deal, under 1,000, honestly. I wouldn't even really be buying. I wouldn't recommend buying Bitcoin to any of my friends or anything right now, unless I would tell them, hey, if you're going to get into Bitcoin now, if you see it double up in price on you, sell it. Just be happy with your double up at this point, because it's getting to that point where it's not going to let everybody just make money off of it. It's going to get vertical, go way up, and then come right back down. Because, the financial analysts on the news and in mainstream media, they're not your friends. I don't know if it's on purpose that they just hire the dumbest people that tell you the wrong information, or if it's by design, or if it's just, I don't know, the way that the herd mentality works, because I don't even trust any of those news outlets for anything that they say anyway. So, it's just getting to that point, guys, like where as the more money comes in and pushes this, we're going to see all of these coins, even black coin. I mean, I haven't played black coin since it was on MintPal. But honestly, guys, it's getting to that point. Black coin gets above 10,000, and I bet you it's going to run. And there's no reason for it to run. There's no reason, at all, for black coin to run. But according to, its chart, so to say, it's cleared its 3-day resistance. Okay, it looks like it's even, I haven't looked at it in a few days, it looks like it just pushed off of the 3-day cloud here with this candle. Okay, so this thing came through. This is how to really just use some simple analysis to look at a price, guys. Like literally, when you see something like this, where the price comes through, it's almost like AMP, except it's a daily cloud on AMP, it's a 3-day cloud on Blackcoin. And once it gets through this 3-day cloud, it pushes. But then what does it do? It dumps. If we were to look at this on the daily, let's just mark out this right here. Right here. This cloud line right here. Okay, so let's mark that. Now, if we notice that this thing is, rallying through a 3-day cloud here, and it went up like that, then chances are it's going to come back down and tag that cloud, which would be that purple line. Okay? And here, look, on the 6-hour, not only did it tag the purple line, but it almost tagged the cloud, the 6-hour cloud. So there's all sorts of ways that you can put the pieces of the puzzle together to be like, oh, okay. Yeah, like, for instance, Blackcoin came through this line, which was the 3-day cloud, came all the way up to here, and then it's starting to sell down, consolidate. Let me try to get it if it wants to dump back down to the 3-day cloud. Boom. Right there you would have got it at like 65. Even though it went to 61, 65 was a good entry on this for where, it's continuing to go. So using all these little tricks and and of technical analysis and understanding the trend and understanding how these waves are going to unfold is going to lead to a lot of opportunities to gain here, guys. I mean, even this little bounce in black coin, if you would have bought it here, just to be up, what was that, 30? Just to be up 30%, guys, in a day. Where are you going to find that in any? And this is black coin. What the daily volume for black coin is what? Let's see, I'm not signed in yet. What's the daily volume for black coin? It's probably nothing. It's probably like, come on. Gosh, Poloniex has been very slow for me lately. And TradingView. But let's see, black. I hope another exchange comes out and takes Poloniex like out and gives you like an actual nice platform to trade on. I'm very tempted to try to develop one, but it would take away from all the other projects that I'm doing. So let's see. All right, let's get alphabetical order here. Horrible platform, guys. All right, black. 98, so almost 100 Bitcoin daily volume. Okay. Now, that's enough, but still, that's enough where you guys could probably slip a Bitcoin out there, in there, and get out 1.3 Bitcoin, no problem. Even in a market like Blackcoin, to put in $1,000, let's say, and make $300, more. To put in $1,000 and make $1,300 in a day on a market like Blackcoin. I mean, look at that. I mean, where are you going to find an opportunity like that in any other financial market right now? I'll tell you right now, you're not. You're just not. It's going to be a lot more involved risk. Meaning that you could have put $1,000 of money into Blackcoin right here, and even if you bought here when the price came down here, your $1,000 worth of Blackcoin is worth, let's say, $900 at this point, and then it bounces and now it's worth $1,300. So there's not any other financial markets that you could trade where you're going to get that much of return that fast with that minimal risk. There's just not. Cryptocurrency is very unique right now because it's providing big opportunities to make large percentages on your money and in a relatively fast period of time, and actually an extremely fast period of time. I mean, it would take you in what the amount of right here. If you were to put $1,000 into Blackcoin, and I'm just using Blackcoin as like a shitty example of a coin that really has no reason to go anywhere. It's I don't know, like I haven't checked up on it in a while, but about 100 Bitcoin daily volume. But like I said, this thing gets above 10,000 here, and it just cleared its 3-day cloud and bounced off of it. Next stop is to clear 10,000. That psychological number. After that, stabilize and then push on. Maybe try to make an all-new time high for Blackcoin. But where are you going to put $1,000 into your money and within, basically 18 hours, have 30% on your money? It's unheard of. Okay, it would take you 2 years to get that return on your investment through a savings account in the bank. It's just like this is a joke, So what we're seeing is a shift now of consciousness of everyday traders to be like, whoa, what is this cryptocurrency markets? Wow, how are these people getting these huge gains? I mean, I'm sure you guys have seen it. Most of you guys have been on the signals, man. Like, we've been killing it. I'm talking like 30, 40, 50, 80% runs, 150% runs, like week after week after week after week. And with not very much risk. Not very much risk. Even the coins that we got, even the 2 coins I can think of off the top of my head that didn't work out, like Huck, okay, like Hunter coin. It gave us a chance to get in profit and put a stop loss at break even. Boom. I got stopped out at break even. If you didn't practice that, then maybe you took a little bit of a loss. I had 2 guys that actually told me they sold their Hunter coin when it rose 40 to 50% and actually made money off of that play. The other one that didn't really go anywhere, Steam. Okay, Steam. It didn't go anywhere, but was it a huge risk to lose a lot of money? Only if you entered it and chased it and then it came back down. But if you entered, based on the buy zone and you stick to the strategy of buying things that are going to go up when they're not going up. And that's like that, just like simple as that, guys. If you see that the market is going up, there's very few times that you want to buy it when it's going up. Simple as that. Like if you recognize the trend has changed or it's shifted or it's pushing in a certain direction, wait for the pullback. There's not many times that you can actually grab the price when it's green and it's moving. You can, but you have to be ready to either get rid of it on the top of that next wave or be prepared to hold it through the correction that's going to come. I always find it's better to get it after the correction happens and set yourself up for the next move. And set yourself kind of like Factum, okay? Kind of like Factum. When Factum, we played Factum, and I mentioned it when it was before it left its 3-day cloud. Excuse me. I mentioned it before it left its 3-day cloud, but almost the same thing like we just mentioned in Blackcoin, guys. All these things are very important little factors to take into consideration here. Okay, now this one here was in a 3-day cloud for a while. So then what we do, it left the 3-day cloud, so let's mark that cloud point right there. Right there, boom. Okay? Now when we look at the actual move that it made, this impulsive move on like the 6 hour out of this area, we basically pushed off of the cloud right here with a 6 hour crossover right there. Okay? So right here is where we impulsed. Almost with the pickup in volume right here. You can see it right here, the pickup in volume. So I measure from that point to the point right here that we went to. And what does that do? That shows me a buy zone. A buy zone that I told you guys to get into Factum under 5 if you could, right in this area. Right in this area here. Why there? Because it made an impulsive move up. We don't want to chase it when it's going up. Like if you guys didn't get Factum in here and for this little run, that's why I gave another signal on Factum to get it on this pullback. To get it on this pullback where it's the 61, anywhere between the 50 and the 61% retracement of this impulsive move. But what is that price point also right there at this purple line? That's the cloud. That's the cloud it just broke free from. So it almost had to come back down and tag that price point. Now, I'm actually surprised that we haven't gotten a tag of that on the 3-day level, meaning that, I'm most surprised that this 3-day cloud here, a 3-day candle here, wasn't when it came back down and tagged. It tagged it before it opened another 3-day. So, sometimes you see it on the daily, like for instance, AMP cleared the daily cloud and now we're seeing daily candles tagging the cloud. This cleared the 3-day cloud, but we're not seeing a 3-day candle tag the cloud here yet. But we did see a cloud tag of that cloud price point on a lower time frame of its waves that it's making. So that's another way to kind of track your waves. This is an impulse here. So, we're looking for something like this from this. From this point here, an impulse out of this area. Now that's kind of, stalling in this area, but if you notice, even this guy lays it out here. When these waves, we have a large wave here and another wave here, as this big third wave unfolds, it has small step waves. See, this is a 1 and there's 2 and a 3 and a 4 projected here and a 5, but that's all just 3, okay? But this is a very good example here, how even with the market cap, as this 1 and the 2 happens, that 3 that we're getting, we're expecting that 3 to be larger than the 1. So we're going to get some sub-minute waves in that 3 that are going to be more recognizable. And that's almost like what we're getting here. We had a large, a 1 and a 2 here, but in this 1 and a 2, let's say we got a 1 and a 2. Now we're getting that 3 up, but that 3 is producing waves within waves in itself. Meaning that this would be a little sub-minute wave here, and then this one might go up here, and then come back down here, and then this come back up like that. And that whole formation is that third leg. So, it's really interesting to point out that, you have to understand as your waves get bigger, they're going to print bigger as well. Which is kind of why Bitcoin, our entire... And the market cycle will take longer too. This wave here, only took let's say a day, whereas it's already taken, about a day just to do the sub-minute wave here that we're going to continue on. So, just kind of keep that in mind with your Elliott wave analysis, that, this third wave that comes is probably going to have a 1, 2, 3, 4, 5 in itself that is, recognizable, is discernible, So, but we always want to look for stuff like that. We don't want to chase the price. Like there's so many people are losing money chasing the price. If you guys just walk away from all these courses with just understanding not to buy things when they're going up and buy them when they come back down at retracement points, you'll make a lot of money just off of that. Just practicing that and not getting caught up in the emotions of chasing the price at the wrong time. Now, even here, simple here. Now, Factum has like what? Factum has A, B, C, D, E, F, Factum. 7,700 daily volume. That's a lot of money. Okay, that's a lot of money where you could probably even have put, you could have seriously even put $10,000 into this trade right here on this retracement point in this zone of around 500 or so where it was suggested to buy. And now within a day, you're up 25% on your money. 25% on your money within a day. With that amount of liquidity, with not very much risk. Where are you going to find that in any other financial market? Guys, you're not. Literally, you're not. Like, you're going to lose a lot more money before you're going to make more money. I mean, I don't want to discourage you into trading other markets. Obviously take this knowledge and apply it to any single market that you can. I'll tell you right off the bat that Elliott wave analysis will work better on gold, silver, corn, rice, and and copper, and like commodities, like very emotionally based staple commodities that we use, okay, and in cryptocurrency, because it's a very emotional market. Like there's not much. There's just a lot of dumb money and limited supply, which is kind of leading to Elliott waves really painting themselves beautifully. Foreign exchange, yeah, you can use the Elliott wave analysis, but you almost need to play on like 5-minute time scales with impulsive moves. Okay, like the bigger pictures, as you zoom out, they will lose their market structure because there's a lot more manipulation that's pushing prices further than you would expect them to go based on your traditional analysis. Like, just meaning that like a lot of the money in foreign exchange, like if it was a play like this, let's say that the euro moved against the pound and we were trying to get this retracement point here. Well, there's enough, manipulation and large money in those markets that they may realize a lot of traders are trying to get in at this point, or even like, let's say this point, okay, and maybe going to put their stop losses at this point. So they'll push the price all the way to that stop loss and hit everyone's stop loss, liquidate everyone, and then move the price in the direction that they want. So when that happens enough times on the chart, when you zoom out at your bigger picture for your Elliots, they don't flow as well because there was a lot of manipulation, a lot of sways in the price, a lot of pin bars that they call them. Like Bitcoin had a pin bar that day that the whole SEC announcement was coming. Okay, like basically a pin bar is this, where there's like no discernible analysis that would lead you to any kind of a good trade. Okay, this right here is a pin bar. Okay, where the price goes up and it goes down, and it just is so volatile within what is this? These are 6-hour candles here, so basically zoom them a little bit more. So yeah, this is the kind of thing that you see a lot in foreign exchange, and this is what messes up your Elliott wave analysis on a bigger time frame for like foreign exchange currency pairs, because you see a lot of this kind of bullshit where like it's just manipulation. The price gets a lot of that happens on like earnings statements days, like where like financial news comes out, or GDP reports for like for a country, like their earnings statements, or how like the economy is doing in Britain or England or whatever. It's all these little factors of the economy that will affect the price. So you'll see a lot of like pin bar action like that, and that will skew the chart for looking at your Elliots on like larger time frames, because you'll see a lot of stuff like this. You're like, oh well, this wave here didn't really, oh, with this, and that's why it really helps to look at the line chart a lot when you're trading foreign exchange, to just kind of cut through all the expansions in price and all the just junk that really wasn't part of what was going on. It was just like a lot of just not expansions in price. It wasn't really the core of the price. So you'll have to, like, if you want to trade foreign exchange, always refer to your line chart for picking out your Elliots in larger time frames. But if you want to play the Elliots in foreign exchange, play them on like a 5 minute, on like an impulse, because that in the whole Elliott wave theory is based on market conditions of impulsive action. Impulsive action. Like, you're not going to be able to pull Elliott waves out of chop, out of sideways consolidation, out of just times where the impulse isn't there, when the market's like lagging and there's not really that much action. You won't find the Elliots as much, but you'll find them in any market, especially in foreign exchange, when you look at like the impulsiveness that happened in, like, let's say, you could even say here, like, if we were to look at this, in like a 5 minute window, this wouldn't have been a clean Elliott, but this action, you would want to play this on like a 5 minute window. You wouldn't want to look at it as part of the bigger picture. So, which in foreign exchange, let me just pull it up on here because I don't have any. Like, let's just look at the euro. Oh, euro USD, Forex. Euro USD, Forex, FX, FXCM. Here we go. Now, you would want to play like 5 minute windows. Like, when you see impulsiveness happening, you want to play you want to pick it out and play it on like a 5 minute window. Okay, just kind of like, we're just going to look at this section here. And we may or may not find an Elliott in here, but let's just check it out. Now, you almost have to play them. Let me get rid of this fib here for some reason. Pull this back. All right. Come on. Sorry, guys. It's taking me forever to scroll to it. But let's just take this little impulsive wave that we're looking at here. Okay. Even in foreign exchange, when you have the impulsiveness, okay, when you actually look, this is, obviously, boom, it pushed off a 5 minute cloud and then it started trending above the cloud, above the cloud, above the cloud. Now, right here, when it broke the cloud and broke into the cloud, that's your time to get out of the trade. Simple as that, guys. Tracking the price with the Ichimoku cloud, even on the 5 minute, that's your time to get out of the trade. Even if it would have continued higher over here, you want to get out of it because you don't know what it's going to do. And if you were to take this trade here, based on the impulsive action, it looks like it almost got a little 1, 2, 3, 4, then flatlined. It wasn't so pretty. But let's say from here to here on this, you're talking 0.75%. Okay? So in how long? Let's just use this example, 0.75% in 7 hours. Okay? Now, for every 1% that the market moves, you are getting, if you're trading like a full lot, 1% market move, you're getting basically half a percent is 100 times return. So that's like a little bit over 100 times return on your money in a 7 hour period, but with a lot more risk. But you have to play these type of moves on a 5 minute. This one didn't necessarily, in this example, give a nice clear Elliott, but this would be how you would want to look at these things on the 5 minute for any kind of structure, because when you trade foreign exchange, you're trading for the pips, the percentages of a point, So as this thing moves, let's say, there's that measure tool again. from here to here. What are we talking about? 28 bars. So this one's like 0.005. So that's like, yeah, right there. That right there is about, what, 500. No, that would be more like 50 pips. I don't know why they have it listed like that. But yeah, so I mean, you're basically looking at, trying to get in here and get out before the cloud break. Okay? And realizing that you want to track this. You could even play foreign exchange. You can even play on a minute chart, guys. You really can. Because it's really that important to get in and out of your trades accordingly. Okay? Now, you wouldn't have much actual way that you could track the price on a minute here with the cloud, because it's going to go in and out of the clouds. On foreign exchange, the most I ever see it ride is like the 5 minute. Whereas like Bitcoin, we can track it on maybe like the 15 minute for a cloud break. Okay? Whereas foreign exchange, there's enough, there where we can actually play it on like a 5 minute for a cloud break. Okay? Meaning that if you were to look at Bitcoin on a 5 minute, it'll go in and out of the cloud. Whereas you look at foreign exchange on a 5 minute, you have a point of reference for that 5 minute trend. Okay? So, just kind of pointing out here that when you play these markets, you can take this strategy into trading any markets, but first of all, you're going to have a lot more risk. You have to get your entries a lot more precise, and you can double your money between here and here. Okay, for sure, you can double your money between there and there within less than a 10-hour period. But you have to get the impulsive moves. You can't trade the chop. You have to know when to get in. You have to track your price on the cloud, and you have to follow the structure that the market's going to make. Now, this one didn't really paint an Elliott, but we have a nice impulse up here. We have a nice pullback here. Another nice impulse up with a flat, and then it just seems like it fell. Okay, so you can't always expect to get your clean 5-wave Elliott out there, but you can always kind of know that with the impulsive action that the market makes, that's when you want to be trading it. Okay, if this was on the way down, right now the euro looks like it's trending up, but I'm sure we could pull it back enough. Here we'd find a place where it was trending down under the clouds and making impulsive moves down away from the clouds, and we would play it the same way. We would play it the same exact way. So, you can take this knowledge of how to trade into other markets, but they're not going to look as pretty on the bigger time frames for your Elliots and your market cycles, because there's a lot more manipulation going on. Your Elliott waves are going to show up more, like I said, in your standard like commodities, more than manipulated markets such as this. Sorry, let me just pull this back real quick. Since I'm looking at this chart, I want to see how far it fell from the. Okay, this is just interesting to point out right here. Like, we didn't really talk about this. I don't use this tool too much, but I have it on here. The pitchfork. Basically, when you have like a pitchfork here, you can basically map out from the high, the low to an anchor point, and it gives you a band that the price, lingers in, and you can play that band. This thing stayed here in this band for like a month. Yeah, basically for a month, and provided trade opportunities within this actual band, within this actual band. These trade opportunities of like, when it was here, anywhere in this blue zone here, it was a buy. And as it got closer to the top of here, it was a sell. And the price basically stayed in this band and created swing trade opportunities. Swing trade opportunities where every time it came to this line, if you bought it and sold it up here, you were selling it for, 1 point, anywhere from 1% higher than you would. And that's like about a 200% return. So, when, you can really map things out and play even these little moves in here, guys. There's a lot of money made on foreign exchange, but with a lot more risk. A lot more risk. That's why I would rather just play. I would just rather play crypto right now, guys, because there's so much more money to be made faster. So much money with way less risk. With way less risk. By just understanding, first of all, the direction that our coins are going, where they're leaving behind this resistance and support, and what kind of chart they're going to paint to get there. Like, for instance, like here's Gamecoin. We talked about this briefly in one of the update videos. But I was saying, like here in like where is it basically? And it was like here in like the low 40s. You know, it was after it made this impulsive move here. It was a good, idea to get into this again. And that was just a few days ago. How much percentage did it go? It went up like 75%, and now it's still sitting at like 50% higher in just a few days. You're not going to find an opportunity to make money on your money like that in other markets. You're just not, guys. So cryptocurrency is like, it's a very, very unique time right now. And we are so early to it, guys. So early to it. Like, just meaning that it's still in its infancy. It really is still in its infancy. When we look at a lot of these charts and where they could potentially get to, Factum, they just closed an $8 million deal or something like that, which is kind of funny to me because, I saw someone tweeting about that they closed this $8 million deal. And, that's kind of like, well, what caused the increase in price? Like what came first, the chicken or the egg? It's like, what came first in that kind of a sense? Like the fact that this thing broke the 3-day cloud and broke out from its higher time frame resistance, is that why it's rallying? Or is it rallying and breaking this cloud now because Factum got an $8 million deal? It's like, that's why I don't really trade fundamentals, because they always seem to align with technicals in some way. We got great news for Factum here just as it's breaking the 3-day cloud. Imagine that. Whether people knew that deal was coming and they stocked up on it in here or not, who knows? But I've always seemed to find that especially in cryptocurrency, it seems like when technicals and when fundamental news comes, it always seems to be like, backed up by some kind of a technical thing. Okay? But when we look at Factum here now, for example, we may very well have to look at Factum like this within the next, 6-8 months, because now Factum broke its 3-day cloud here. It's breaking this, ramping kind of a like this thing's been in this, kind of ramping action here for 482 days. And so it's basically, and I think we can even say that this thing had trended up here during that time. Let's see. Yep, even trended up during that time. So we have a time frame here now of all of this price action that really hasn't expanded in price. This almost reminds me of looking at Dash or looking at Monero before they left their box, okay? Before they left their box. So I'm going to put a box on Factum here like this now. And I'm going to say that, that Factum hasn't really done any kind of a huge thing yet. We're basically like still in this kind of a box. When we make a new all-time high, I think what will happen with Factum is Factum will do something a lot like Dash did and a lot like Monero did, where it pokes its head out of the box, okay? Where it pokes its head out of the box, boom, tags like this one, maybe even the 1.61, comes back down, consolidates, and everybody thinks, oh, this thing's dead, or they don't understand that right there is where you want to buy that dip for that next huge market cycle that's going to come out of this. Okay? Now, that's what I see happening with Factum. I see Factum as, fundamentally, it's not going anywhere. They just got a really good deal. The technicals look pretty good for this thing. Once this thing tags the 1.272 here, or the 1.61, what it will probably do is expand in price out of here, tag one of these zones, and then come back down. Oops. Sorry, guys. I'm going to leave my drawing tools on. Then come back down and tag the breakout box. And, that would also be tagging the previous high and turning that, that area of resistance into support. And then it would look to go again. So I'm really bullish on Factum. I'm actually going to hold the Factum that I got on that retrace at 500 right here at this purple line. I'm going to hold it for a little bit, at least until it hits this 1.272. So I'm basically going to hold the Factum from the signal that I sent out the other day We were trying to get that retrace of this impulsive move. I'm going to hold that now. Because why not? Why not? Hold it from here to the 1.272. I'll take 125% on my investment. Sure. If I already realize it's going that way. You know what I mean? That's what you have to understand, guys. It's like we see things with our analysis that other people don't see. We understand cycles in the market that other people don't understand. There's not many people out there who are going to understand that something like, let's say, XEM, okay? XEM is a beautiful example because it just nailed the 1.272. Just like I told you guys it was going to in that video. Just like I told you guys, we're going to probably head for 2,500 for this thing. And then, I said it could even go here to take out the 1.272. Boom. Look at that. With a wick. So that means the price expanded up to here. Let's look at the line chart now. Price didn't even get close to there. Didn't even get close to there. So anything that you sold right there based on the idea and the strategy that this thing is creating a new market cycle and it's going to try to tag the psychological, emotional print left behind by the last wave, this is like I said, this isn't rocket science, but it's almost like sacred sciences, like by understanding Fibonacci and its relationship to human emotion and how measurable and predictable that is, it's undeniable, guys. Like how can you, even with gold, gold hitting a 2.272 point of an emotional print that was left behind 20 years prior. 20 years prior. Okay? Now we're talking here, this thing basically, left that print from here to here, from that high to this high now. We're talking a good 300 days. I'm sure these are different traders, different money, but same emotions. Same emotions, guys. It's the only thing that's predictable in any market. The only thing that's consistent in every single market that is going to be mapped out on the chart, the only thing consistent in any of those markets is the emotions of the traders trading them. That's it. And we're all human. We all experience fear. We all experience greed. We all make bad decisions. It's amazing how many people make stupid decisions with their money. You would think that people would have such high value and say, oh, this is really important decisions I could be making here with my money. And, but it's the opposite. People make stupid decisions with their money. People throw their money into the wind trying to chase a pump or, flip a coin or get rich quick. Okay? And that's what we're seeing here. That's why this price will extend all the way up to here and hit this point pre-mapped out for us. Because it's the same emotions in the market again. I know it sounds crazy. It sounds like, something that, anywhere from like witchcraft to voodoo to like just straight up off the wall and thinking outside the box. But, it's true, guys. The relationship of Fibonacci to human emotion and how measurable and predictable that is undeniable. And that's why it's one of the biggest tools that we'll use in our trading. It's going to help us to get our entries, get our exits, and to understand, how many people other than us and maybe some people who are trading Fibonacci, how many people had their sells sitting here at 3,400, and got out at the perfect price point in this move? Probably not too many people. I know that, everybody on the signals list that took that trade did, but that's based on this strategy, based on the Elliott wave theory, based on the market psychology theory. And it's undeniable. It's going to play out. So that's it, guys. I gotta run. We're already at 8 o'clock here. But that basically concludes our 12-part learning session. But we're gonna get together again on Friday and do some live trading. We'll do the same time from 8:30 Eastern time to 10. We'll still do the same hour and a half. But we're gonna actually probably have all you guys unmuted, and maybe if you guys can try to kill your background noise or whatever if you can. I know I'm probably bad at saying that because you guys probably hear like crickets and weed whackers and all sorts of stuff in my background. But we're just gonna have like another session where we'll just roll through the charts. We'll roll through the charts. We'll do some live trading. We'll do some live technical analysis, and just kind of get a feel for it in the moment, in the live moment. And then yeah, and then we'll just keep moving, guys. Keep stacking these Bitcoins, guys. There's so much opportunity here now. This is great. I hope all you guys are making a lot of money here. And I'll catch you guys later. I'll catch you guys on Friday. Take care.